I know I was supposed to take a quick break, but hey, I couldn't resist going back to something that I'm passionate about. Hey, how's it going? It's Rocky. Welcome to week number 31. So our little sabbatical was cut short, and I actually came back to the market to trade this week. My initial intent was actually to take the entire week off, minimum 1 week. However, I couldn't pass up the option of not trading when the credit agency Fitch downgraded their credit rating for the United States of America. So fundamentally, to me, that was a very bearish move, and that is why I decided to jump back in the market, albeit a bit conservative, but it was an okay week of trading and going back to our fundamentals here. So let me just turn on the line so we can see the actual trades that we did. It was right here after hours on Tuesday when Fitch downgraded the rating for the US, and we had a total of 2 shorts that we took here. So we'll bring the calculator here just to calculate how we did on this first short that we took. And basically, the 2 trades I'm talking about is right here. These are the 2 shorts that we made. First one here was a short of 35,635, followed by another short of 35,685. And these 2 shorts, that was an average of 35,660. And we ended up covering here at 35,591. So we'll do the calculator to calculate exactly how we did there. So our average was 35,660, and we covered at 35,591. So that was a total of 69 points. And because we traded 2 contracts, where 1 contract for every point move is $5, so with 2 contracts is $10. That's actually a total of $690 before commissions and fees. So that's not bad for that first trade. And then the second trade that we did do was not until Thursday. This one I did right at midnight. Well, a bit close to midnight before the European markets opened. And well, basically you can see here we shorted again with 2 contracts with an average of 35,242, and we covered a couple hours later at 35,278. So this is one of our better trades, or the best trades for the week, and let's do the math to see exactly how we did on this one. I'll bring the calculator here. Our average that we shorted at was 35,432, and then we covered at 35,278. So that was a really good, 154 points. And because we traded 2 contracts of YM times 10, this trade right here, right at the open of the EU market, again, this shows you that you can make money during the Globex even if the market is slower. We made a gross profit of $1,540. Now next, let's go through our third trade, which was on this Friday. This is one of those big what-if trades. It was nice though, because on this Friday I was able to attend an in-person event that was run by Thinkorswim, really TD Ameritrade. This is one of their last in-person events before they become officially Charles Schwab. I left a lot on the table, but that's okay. I know I missed out a lot on this, and it was actually a bit bittersweet, and I'll go through exactly why I say that. So on this trade, we ended up shorting with 3 contracts. So the 3 contracts is right here. That's our total, an average of 35,537. And then we covered later on at 35,523. And if I were to draw where 35,523 was, let me just, actually I'll draw this out a lot clearer so we know exactly where that is. So our average, again, 35,537, and then 523 was really just right about here, more or less. So he can see how much I missed out. So 400 point move that I missed out on, and we shorted again at 35 537, and we covered at a measly 35,523. So it was 14 points. So I could have had 400 points, but just because of my entry and being preoccupied at the conference, or really the workshop, I missed out on 400 points. But that's okay. Multiply that by 15. That was a 210 points. And what was a bit bittersweet about this trade is, if you check out my content from last week, I have a link above. I had to pretty much take my losses on that Friday because I needed to withdraw money, and it was close to $16,000 loss. And what was a bit bittersweet about it is, let me erase the drawing I had there. If you see this white line that I do have in the bottom here, so this white line was actually what my short entry was from about a few weeks ago, before the run of the Dow Jones Industrial Average. So I was short, and it was a bit bittersweet for it to touch it, because in reality, if I was able to hold on for 1 week, then I wouldn't have lost that $16,000. But there was just no way I would be able to handle that. It would have been sleepless nights, and then I would have a lot of margin calls, and I didn't position it right, so it would not have been a good week at all. But it is what it is, and right now we'll just focus on going back to our fundamentals. The conference, or rather the workshop I had with TD Ameritrade in person today, reminded me a lot about trends and, of course, supports and resistances. Anyway, stick around and we'll go through to the statement on actually how we did this week. So this is our account statement for the week. We are recording it on Friday, August 4th in the year 2023. It's about 9:43 p.m. And the statement that I'm showing started from this past Sunday, which was July 30th, to today, Friday, August 4th. Now, looking through our description, just a couple of things to point out was we had a interest adjustment. So basically the cash on the account is gaining some interest, not a lot. So just $6.13 that it got there. And of course, a margin interest adjustment due to the margin calls I had, and that wasn't so bad at negative 25 cents. And looking down, it was pretty clean. And the little screw up we had, well, not really a screw up, but just because of the dump in the last 3 hours of the market today, Friday, we had a mark-to-market loss at about negative $945. No deposits and withdrawal this week, so it's pretty straightforward when we calculate our performance. So for the week, our ending cash is $26,449.52. And as you noticed, the number on my account is a lot lower because last week we had to withdraw a significant amount to pretty much pay some bills, and I was planning to really take a bit of a break for a minimum 1 week. And anyway, we'll subtract our starting cash up there, which was $24,869.42. So for the week, pretty decent gain that we had of $1,580.10. And you divide that by 40 hours, which is your typical full-time position in the US, and that would have been an equivalent of $39.50 an hour. Now we wanted to also look at the ROI, which is very important. This is because it's in relative to the size of your account, right? We're all trading different sizes of account, so it's good to look at it from ROI, return on investment, as a percentage. So for the week again, we had a gain of $1,580.10. So we'll divide that by our starting cash of $24,869.42. And let's multiply that by 100. So for the week, we have an ROI of 6.35%, which isn't bad at all. And go back to really taking this slow. The conference I had today at person with TD Ameritrade, which runs the Thinkorswim, which is what I use here, reminded me a lot of the importance of trends and support and resistances. So hopefully we can bring that more into practice, or just remind ourselves the next time we trade, and hopefully we can get back to the swing of things and be able to have a decent profit. Thank you for supporting my journey. I know I was supposed to take a quick break, but hey, I couldn't resist going back to something that I'm passionate about. All right, I'll see you in the next one and have a good one.